Okay, so it's recording now. Perfect. So this is our commercial awareness deep dives, series one, episode two. As said, my name is Azhar. We have Tom and Adam. So the topics that we'll be speaking about today is Greensill. So if you've been on Financial Times, it's all over the front page. And then you have GameStop. So GameStop, we had GameStop over the last few weeks where the whole saga on what was going on. And you have Boeing. So if you are, I don't think anyone has been flying recently due to the pandemic, but that's the whole thing we're going to talk about. What is the future of Boeing? So moving on, we'll speak about Greensill Capital, what happened, how it failed. Um, I will introduce my topic. So this is my topic. So what is Greensill Capital? It is supply chain finance. And I've got a small little graphic that I took from the Financial Times over the last week about how supply chain finance works. It's nothing new. It's been around for ages, centuries. But the kind of the bit on the right where the financier sells the debts to investors, investors provide loans to financiers, and the insurers as well. That's kind of the new bit to supply chain finance. And then if you see the bottom left of my screen, same mistake, different financial product. So what is the Greensill Capital about? So Greensill Capital was founded by Lex Greensill. He was on David Cameron's cabinet. He was on as David Cameron's cabinet advisor. And if you follow the Carillion case, they went to administration. It was also this it was part of his it was part he was part of the factor of why they went into insolvency. So in terms of Greensill Capital, BaFin, which is a German's capital watchdog, German's finance watchdog, sorry, they kind of raised cautions of irregularities of Greensill's finances. There was some irregularities in how they did their balance books. So what happened was Tokyo Marine, which is an insurance company, they ended their insurance coverage to Greensill, and this caused Credit Suisse to freeze the funds that they. So Credit Suisse is the investor. So if you see the kind of the pot of the treasure pot, that is Credit Suisse, and the insurer is Tokyo Marine. And so Credit Suisse freezes their funds to Greensill Capital. And what this has done is now Greensill doesn't have the capital to kind of to lend to companies anymore. And this affected a steel magnate who is Sanjeev Gupta. Sanjeev Gupta, he's an Australian steel magnate, so he's got the GFG alliance in Australia. And what this means is that if his company collapses, there will be a huge job loss um, in Australia and wherever his company is functioning as well. And so this kind of raises the question on supply chain finance and how regulations and the ratings have kind of missed kind of interpreting what supply chain finance is about. So in terms of regulation and as and we'll say in terms of your commercial awareness of where supply chain finance works in the whole system is it is some kind of reasonable to say that I will give you give a SME, a small business, money to pay off their suppliers. But the thing is, when you're loaning them the money, you're selling off their debts to someone else, and this kind of increases the risk of the debt, and this is where the problem arises. So what I kind of recommend is there should be more regulation on selling these debts to investors, and as well as ratings companies. So if you have S&P and then Moody's, they won't be able to kind of rate these debts because they would have to do their due diligence on the bias of the kind of financial they have to buy the buyer, they have to rate the buyers of the debt, and this creates a problem. So I'll just like to ask Tom and Adam if there's anything they would like to say on this.
Yeah, well, I thought it was quite interesting that it borrowed about £100 million from its own, I think it was a sister bank, just before its collapse. And I just thought that was quite an interesting point to touch on, because obviously things weren't looking too healthy for Greensill, and borrowing about 100 million from its own bank does seem like a bit of a rogue move to make in a lot of ways, like kind of anticipating its own demise and taking £100 million out of a sister bank. Looking forward, I was kind of wondering. I mean, I haven't done too much reading on that, but I was wondering if you knew anything more about that.
Oh yeah. So in terms of the sister bank, which was Greensill Bank in Germany, it kind of borrowed 100 million euros, if I'm remembering correctly. And this kind of shows that there was internal problems with their management, and which is why BaFin kind of flagged out that there's irregularities, and so this shows that Lex Greensill himself is he kind of blamed Financial Times recently for character assassination, but in terms of his own institutional failure, this kind of points in the direction of irregularities within Greensill Capital itself. Adam, do you have anything to say?
Well, I was just going to say, obviously, there have been some mistakes on Greensill's end, but do you think, in terms of their failure, how badly do you think that could affect Gupta and his GFG alliance? Do you think, because obviously his organization is enormous, I think operates in 60 countries and is based in 30 with like nearly 40,000 employees. Do you think they're almost too big to fail? And like, I'm not sure how badly Greensill's failure will affect GFG as a whole, but I wondered again if you had any thoughts on that.
All right. So GFG itself, they are kind of sole supplier for this capital is Greensill Capital, and that's something Sanjeev Gupta, he kind of didn't spread his eggs, so he kind of put it all in one basket and kind of relied on Greensill Capital. But you are right to say that GFG, it is a huge operation. So like GFG is steelworks. I was thinking of BHP, which is mining, and kind of drawing those parallels where you have multiple operations too big to fail. They'll be able to find other investors or other suppliers for their capital. But in terms of the kind of trust that you have in the business system, and Sanjeev Gupta's reputation as well, would the other investors want to come in and kind of fund his operation, or would they just let him go and leave GFG into insolvency? That's something we could watch over the next few weeks. Yeah.
Yeah, so you see it more of like a not kind of like a slander on his reputation and per se, but just like maybe a little bit of a damage looking forward. I mean, I did a bit of reading about it and found out that David Cameron was also an advisor on the board of Greensill Capital, and I think it was SoftBank funded it to the tune of something like $1.5 billion. So maybe not only are we going to see things like overspills into kind of like the reputation of, as you said, Sanjeev Gupta, kind of his business empire, but also maybe into the reputation of SoftBank or people like David Cameron who have backed the company so hard in the past.
Yeah, I think SoftBank it took a hit as well in the WeWork saga recently.
Yeah,
and it's just showing that they're just kind of pouring their money wherever they think they speculate that there is a future to grow. And I shared 2 links on the chat where I kind of got more information on the Greensill insolvency. And well, we had Lavanya who suggested the Apollo and Athene the merger earlier this week, and they were actually going to buy Greensill's part of Greensill's IT systems, but the thing is, the deal kind of fell through because the IT systems they basically wanted to migrate to a different bank, which is JP Morgan Bank. Over the last few weeks, if you were keeping up with the Financial Times, that was unfolding as well. So you kind of see Greensill kind of going into a collapse gradually because of one thing of the finances, another thing of the reputational impacts on how his name has kind of now become something of like Lehman Brothers during the global financial crisis. So you see Greensill going through the same thing. And then I kind of wanted to draw the parallel to what happened in the GFC, where you have derivatives, so financial products that kind of confuse investors, even confuse watchdogs. And so in terms of regulations, should there be more regulations, Tom, do you think?
I mean, based off of what you've just said, I mean, you've done more research than me clearly, but definitely. I mean, as soon as you see something like this, like the collapse of what is a very large firm within a very large business empire, as soon as you see a collapse like that, you do need to see kind of regulations come up. And it is unfortunate that it takes something like this, like the collapse of a large firm, to kind of prompt that regulation to come into effect. It needs to kind of be a bit more preemptive than this. I know Adam did a bit of looking into GameStop regulations, so I wondered if he had anything to say. But yeah, that's my I guess 10 cents. That this kind of regulation, instead of just being reactionary, needs to be kind of more like preeminatory in its nature.
Well, I was just going to say on that in terms of regulation, that I think it, especially in the financial industry, we only tend to see big changes to regulation for the better after a mistake is made. I think there's a lot of, whether it's housing, mining, any industry, I think that regulation really only comes into it, or new regulation, improved regulation, when mistakes have been made. And I think the unfortunate thing about that is that, generally speaking, the people that will suffer the most through the lack of regulation are their employees on the ground. Obviously, even when big businesses fail, lots of money can be lost. But I think ultimately what, for me, is potentially disheartening about Greensill, again, like so many others, is that the regulation and rating that needs to come from that wasn't there in the first place, that could have protected employees all over the world.
Yeah, okay. Yeah. So what you're saying is preemptive regulations, and that's the thing about this new financial products. The regulators themselves don't really understand it. So I feel like, in terms of, I've been following the global financial crisis over the last few years and how it kind of unfolded because regulators didn't understand. So should there be like a form of blanket regulations on financial products itself, do you think?
Yeah,
I think possibly.
The trouble is, sorry, Adam, do you want to go first?
No, go on. Sorry, Tom. Go on, Nick. Go. No, you go. It's fine.
Thank you. The old Wi-Fi clash is coming up. And the trouble is with financial products is that some of them are like, a lot of them are very, very different to one another. So kind of like blanket regulation probably isn't the best way to go, I wouldn't say, for like the kind of mixture of different financial assets and kind of financial products that are offered by a lot of these firms. What we probably need to see instead in that sense is the government being moved out of the knowledge shadow that they currently exist in by firms. So kind of more of a, I guess, symbiotic relationship between firms and like the government, just so they can kind of, as I said, come out of that knowledge shadow, get the information they need concerning these products, understand them properly. I mean, if you look at the kind of whole credit default swap crisis, the government really didn't know what was going on there, and it did take until it was too late for that to come to light. But if there was a bit more kind of transparency within the markets, and certainly within the firms that kind of manipulate those markets, I think it would definitely be beneficial to the retail investor, and probably also institutional investors being on the kind of protection side of things. Adam, off you go.
Yeah, well, I was going to say on that, I think the problem with blanket regulation when you're dealing with global firms is, how that is managed in terms of on a country-to-country operation. And I think what Tom's saying is completely right, that communication and information are key to governments and international organizations supporting big business and international business. in order to protect both the companies themselves, their assets and their industries that they're a part of. And as we've seen industries move from one country to further afield as those countries develop economically, I think it is important that there's an open conversation, like Tom was saying, between government and business, but not just on a domestic level, but on an international level as well.
Okay, yeah. So this kind of feeds onto our next topic, where we'll talk about the GameStop saga. So Tom, I'll let you take over on this.
Yeah, sure. Thank you, Azar. So essentially, I chose to speak about GameStop to all of you people listening, and the kind of people who will be listening, like watching this back, because it kind of represents a very interesting battle between kind of multi-billion-dollar hedge funds and kind of the average retail investors in the market. So I'll start by just giving you like a brief overview of kind of the situation that led up to it and what indeed did happen. So GameStop is essentially a failing company that sells video games, and until about a week ago didn't have any kind of e-commerce operation, or indeed any kind of intent to move towards e-commerce. So it only had kind of physical stores, which obviously in today's world just isn't really a viable business model to have. And for that reason, the company was going out of business. Obviously, COVID accelerated that, but point still stands. So what happened with GameStop? It was that it had a short float on it of about 85%, and a short float is basically where people borrow shares of a company from, say, big pension funds. They borrow the shares and they sell them in the hope that they'll go down, at which point they'll buy the shares back at a lower price, and the spread they make between those 2 points is the money they've made. And so 85% trading its shares were kind of betting on GameStop shares going downwards. So they were very, as would be said in kind of the stock markets, they were very bearish about the shares. And a Reddit group named r/Wall Street Bets came on, like, kind of cottoned onto this. What they did was they launched a coordinated buying campaign against the stock, which essentially meant that the stock rose around 1,800% in a matter of days, from a low of around $2.57 last year to a high of around $350 this year. And this is completely unprecedented in the markets, especially with a stock that's failing, and a company that is failing as bad as GameStop was perceived to be. It's just a very interesting dynamic to see in the market. And you might be kind of sitting there thinking, well, how did this happen? How was this allowed to happen? So I'll kind of like briefly explain that now. So essentially, when the price of an asset that a trader has shorted goes up, so as I mentioned earlier, 85% of the float of shares for GameStop was shorted. When their kind of positions start to reverse, so when the stock starts to go up instead of going down, people who have shorted the stock, they have to do what's called covering, which means that in order to stop like further losses as the stock goes up and they've bet on it going down, they buy the underlying shares. So what this meant was that if an investor had shorted the stock at about $18.84 as it opened at the start of this year, they would have to cover their positions by buying the underlying shares to kind of stop losses on their positions. And so this meant that if they, as I said, bought in at $18.84, they would have had to come up with another $301 per share to buy the shorted stock back and return it to the original owner of the stock, i.e. the pension fund or whatever. So what this does, this created massive upward momentum for the price, and created a kind of parabolic move, or an exponential growth move, as we've seen in the GameStop shares. So there's a couple of different implications that this has had, not least of which the implication that I wish I could have made more money off it than I did, just not being someone who's just sitting on the sidelines. But an implication is that short selling, which has historically been a very important kind of dynamic in the market to ensure the price of an asset is kind of priced towards its true intrinsic value, that's kind of been called into question, as has the kind of level of market manipulation that was going on there. I mean, Azar and Adam, I don't know if either of you want to weigh in on this after I've kind of finished this little spiel I'm going on about how kind of legal that all was. But essentially, it's demonstrated the power of a coordinated buying attack on a stock. And in this instance, the power of social media was kind of combined with the power of like mobile apps such as Robinhood, which were facilitating this massive influx of retail investors into the markets. And like the kind of momentum that carries and the kind of buying pressure that it generated was something that we really haven't seen for quite a while. And so what this has kind of done overall is created uncertainty in the market about its ability to kind of properly price assets. I mean, GameStop, as I said earlier, was a failing company, and yet its shares skyrocketed, and it's kind of become one of the biggest names talked about this year for in terms of stocks. And so I think it's a really, really interesting case study, and one which potentially will have the possibilities to kind of shape how the markets move within at least the next 5-10 years, unless regulation is brought in to kind of deal with it. So at this point, I guess that's me done with my official presentation. Azar or Adam, if you want to come in and kind of weigh in on any of what I said, that'd be more than welcome to do so.
Well, I have a few sort of thoughts on regulation post GameStop, and I think similarly to what I was saying earlier about big international firms and such, I think the thing that was so interesting about GameStop, part of it was a reflection of the pandemic, that you had lots and lots of individuals who were day trading on their phones with a bit of spare cash because they didn't have the level of day-to-day expenditure they would otherwise have, you know, going to a restaurant or shopping or any of that kind of thing. So I think the uptake was much, much bigger. And I think what's also interesting, well, two more other thoughts really. The first one that I thought was very interesting was the response in America from the Senate and from Congress, because obviously American politics at the moment are very, very polarized. But what I found interesting particularly was you had the far right, your very, very libertarian Republicans who are all about, you know, free market capitalism and all that kind of thing, who genuinely believed that Wall Street had got it wrong. They'd had their fingers burned by day traders and it was sort of their fault, they're playing the game. And equally on the far left, you had the bring down the big business and close the wealth gap and that kind of thing, who liked it because it was this Robin Hood style, taking from the rich to feed the poor, almost, I suppose. And I think that's going to be really interesting to see, especially in the States, how they try and regulate this further. You know, giving Reddit as itself is a global platform, Twitter itself is a global platform. And there were lots of journalists coming out afterwards that were saying they found it particularly challenging because obviously when you write an article, whether it's in the Financial Times or in a student newspaper about stocks, all the disclaimers you have to put in there to stop yourself being accused or convicted of market manipulation. And I think that Reddit was largely quite unaccountable for it. But equally, how you would go about accounting individuals who are using, you know, anonymous Discord service and Reddit pages with VPNs and that kind of thing would be incredibly challenging for domestic governments to regulate. But yeah, they were sort of my thoughts on that I found quite interesting.
Yeah, so for this whole GameStop thing, I watched the video of the hearing of the guy who started off the whole Wall Street bets thing on GameStop, telling people to kind of buy GameStop, buy GameStop shares, and he in his hearing said that he felt that it was a good stock, so he told people to buy it. There was no personal kind of goal in that. And the thing about this is it the retail investor's fault or is it the hedge fund manager's fault? That's the whole question. And you have like Adam said, you have the whole left and the right in America coming together to say that, oh, you see, the institutions are controlling manipulating the whole stock market in this case. So that was the question about who is to blame, and where the regulation should lie. Should it be with the hedge fund managers or should it be with the retail investors? And retail investors, I don't think they should be blamed because they're doing what they want to do to get the most out of their money. But the hedge fund managers, they are institutional, so they're kind of sitting on a huge sum of money themselves, and them shorting GameStop, was that market manipulation in itself? That was another question I kind of like to ask you.
Yeah, I think you bring up a couple of good points there. I wouldn't say that them shorting GameStop is necessarily market manipulation, because shorting is just kind of like a natural bit of what goes on in the stock markets in terms of like fairly pricing assets and making sure that the prices that are given to assets are reflective of their true intrinsic value. And although GameStop did end up in a situation where it was vastly, and still is vastly overvalued, I mean, I think it's about despite its high being at about $350. I think it's sitting at around 260 currently. So one would argue that it's still not being priced properly, but that short float that it did have towards the start of this whole GameStop fiasco was helping to price into the stock the kind of concerns that the market clearly had about its viability into the long run. And so for that reason, I wouldn't necessarily say it's market manipulation. What, however, may be considered as market manipulation, if not looking at the kind of the prevalence of retail investors on Wall Street bets and the kind of coordinated attack on kind of triggering that short squeeze that we saw. I see it, you kind of got that on one side of the story, and then on the other side of the story, you've got the shutting down of Robinhood, trading GameStop, trading AMC, and kind of that kind of move halting those like the trading of those shares, just as the momentum was really building, like kind of towards the top of the peak, was something that did cap the momentum. And for that reason, I think that definitely can be considered kind of market manipulation, in the sense that, I mean, they were brought to court, I'm pretty sure. Was it Melvin Capital? And I didn't really like watch it, but I kind of read like a brief synopsis of what happened, what happened. And yeah, I just think it is an interesting case study into kind of both sides of the market. I mean, traditionally the market's been very skewed towards institutional investors. And one thing I'd actually like to put to you two is, like, kind of, do you think we're kind of sitting at maybe a point of inflection here, whereby the kind of power that's kind of traditionally sat with the institutional investors in the market is now kind of more moving towards those retail investors?
Well, I would say on that, I think this has been historical over the past 2 or 3 months, and I think what's especially interesting in terms of where it will go from here is, GameStop's share price rose over the course of this week as they announced they would move change in management and move across to e-commerce, which arguably probably wouldn't have happened if the company hadn't been so overvalued and hit headlines around the world. And I think GameStop will only survive because of what's happened. Equally, I think that it's interesting, as Tom was saying with Robinhood and Melvin Capital, that the internet, generically Reddit, Twitter, etc., called Robinhood out quite quickly for shutting the trades down. They were accusing them of, market manipulation on their own end, because Robinhood works very closely with Melvin Capital, who suffered enormous losses as a result of the whole GameStop fiasco. And I think that's going to be very interesting. There's much more transparency to the financial markets, much more transparency to big institutions, because the internet generically as a collective, through the power of social media, are calling out big firms when they're potentially playing a bit dirty in order to increase profit or cut losses.
That is an interesting one, Adam. What I was going to say is the retail investors in this case, they were all at home. I think, Tom, you raised it while you were explaining it. They were all at home, stuck at home because of the whole pandemic. Maybe that was one of the reasons we would not see it again if the lockdowns are lifted. No one's gonna bother trying to play the markets again if they are going back to work and they're busy. But we don't know. Maybe the retail investors will stay. Another thing I would like to raise is in the US, they've got the 1.9 trillion stimulus, and then will this they are handing out stimulus checks? Would this kind of give more powers to retail investors, do you think?
Sure. I think the point you raised about people being in lockdowns now and kind of having little else to do with their time but to follow kind of like stock markets. And I think earlier in kind of 2020, when people were kind of sat around and the initial stimulus check came out, I think that was something that definitely kind of fed into the pump that you saw from retail investors into the market, and definitely helped kind of contribute towards this GameStop thing. Because I mean, I know what I'd do with if I had $1,400 sitting in my account, like just come from the government, and I saw GameStop rocketing. I mean, I would put money straight into it if I could. So I think you're definitely right to point that out. But one thing I would say about this kind of new round of stimulus coming out is that perhaps, well, whilst we might not see another kind of GameStop situation, purely because like hedge funds are kind of moving away from like kind of the heavy short positions that they may have taken before. I can't remember the name of the I think it was Citron Research, quite a well-known hedge fund that's really actually well known for publishing short reports. And essentially, when they publish these short reports, the stock would almost instantly like decline because of the kind of nature of their research and the weighting that it carried in the market. So something that was really interesting for me was to see that they're actually stopping shorting companies, and they're kind of moving towards more longer term positions now, and more kind of positions looking towards the upside of stocks. And I think that has definitely kind of come as a reaction to this new kind of danger that that hedge funds are experiencing. And then just like kind of touching on the point that you made about the kind of continuation of this into the future, I think instead of maybe this being like a one-time blip, like I think quite a lot of people see it to be, I kind of more see it to be maybe like a trend, as I said earlier, I guess a point of inflection, a kind of point in time where there's going to be quite a big change in the stock markets towards the kind of retail investors, in the sense that a lot of people didn't used to be able to trade, and Robinhood, and there's myriad other platforms that I could name out there right now that are providing these services to kind of your average investor. More and more people, I mean, I know a lot of people at university who are kind of getting into the stock market, and who necessarily don't have as much information at their fingertips as they probably should do. So something that I would just like to say to anyone who I guess is watching this and kind of would be getting into investing is that you need to educate yourself before entering into the market. I think a lot of people who are going into the market right now see things like GameStop, see things like AMC, and think, oh, there's a quick buck to be made in the stock market. But the harsh reality is that the market can go up, but the kind of current bull market that we're in right now isn't necessarily going to last forever. And I think a lot of people are going to get their fingers burnt. So that might kind of put off a lot of investors looking into the longer term. But in the medium term, I do think we see a kind of continuation of the pickup of retail investors. Unless either of you have anything else to say, would it be kind of prudent to move on to Adam for the sake of time?
Yeah, we'll move on.
Yeah, no,
so
fine.
yeah.
The hedge fund.
There's a question there. What are hedge funds?
Do you want me to?
Tom,
do you want me to answer that very quickly? Yeah, sure. So hedge funds are a kind of, I mean, obviously a type of fund in the US. So a fund is kind of something you can buy into, and which has kind of a collection of investor funds that invests across a kind of series of asset classes and securities. And what hedge funds aim to do is they aim to kind of mitigate the downside risk on their investments by investing in kind of a range of different assets. So for example, they might invest in stocks, they might invest in even cryptocurrencies now, commodities, or things like derivatives. So whilst they might buy, say, a stock in the hope that it will go up, they might buy what are called call contracts on a similar stock, or indeed the same stock, which essentially bets that the stock will actually go down. So they've got what's known as a position that looks towards the upside and a position that looks towards the downside. So if the stock moves up, then their kind of downside position, they get losses on that. But if equally, kind of if the stock goes down, they've also kind of got a position there to make money. So whereas a kind of traditional investing strategy would kind of just see you kind of betting on the market in one direction. So either like you bet on the market to say, I think it's going to go up, I'm going to invest in shares. You kind of weigh off that the risk that it's going to go down at the same time as you're betting that it's going to go up. Does that kind of answer your question? I'm not sure if you can see in the chat.
I think that was a good explanation.
Nice. Well, we'll just move on to Boeing.
Oh, brilliant.
Cool.
Okay. So my topic is Boeing, and I'm talking here about the global aerospace manufacturer that many of you will be familiar with. If you've ever taken a flight anywhere in the world, chances are one of them was possibly a Boeing. And what I'm going to be talking about this afternoon briefly is 3 models of Boeing's aircraft that have had some technical issues over the past 3 or 4 years, and the financial implications on Boeing at the time, and then where Boeing are at the moment and moving forward, because I think it is a really interesting case study. And I would just say before I discuss these incidents, that this doesn't include a wide range of crashes and incidents that have happened with other Boeing aircraft. because if it's the instance of pilot error, or like the tragic example of the Malaysian Airlines flight, incidents outside of the company's control, then it rarely affects the stock price too dramatically, or indeed the company. All of these examples are major technical issues with the aircraft. So briefly, looking from the left-hand side of your screen across the right, with the 737 MAX fiasco. So October 2018, a Lion Air flight, and then in March 2019, so a little bit afterwards, an Ethiopian flight, both 737 MAX models, crashed and killed pretty much everybody on board. What happened over the back of that was the FAA, which is the Americans' management for airlines, grounded all of the models of aircraft in the United States. That immediately had an impact on the stock price. I think it fell at that point about 10 or 11%. The issue being that because the two crashes had happened in such short proximity, and both were a result of a technical error on board. If you're interested, that error was to do with the flight computers correcting themselves. And what was happening is, instead of correcting positively, the plane was pitching downwards and pretty much falling out of the sky. Quite scary stuff. And Boeing immediately began to backtrack and put out the press statements that the aircraft was safe, etc., etc. But as you can see there, by the end of March, all 387 aircraft around the world were on the ground. Had those planes grounded until January of this year. Very few airlines are flying with them at all now, and the financial implications were massive at the time. Like it says there in the second paragraph, over $2.5 billion in settlement claims because of accusations of fraud and a cover up on Boeing's end, as well as all the crash victim funds as well. More recently, however, in January of this year, the flight there that we can see, flight number 182, which was a 737-500 series, so a similar model of plane but not the same, crashed in January, killed all 62 on board. Again, it was a loss of control. Slightly different though, it was to do with the left engine. The plane didn't correct itself, and again, it fell cleanly out of the sky. Boeing, as usual, released its statement, said the planes were fine. There's currently an ongoing international investigation into this crash, but Boeing are still taking fire for pretending the aircraft is safer than it is. The thing that was different about the 737-500 though was that it's a plane with a very, very clean track record. It's been in operation since the 90s, and there's been very few incidents. So in terms of investment, it wasn't as dramatic on Boeing's stock price, because a lot of people are quite content that the 500 series is safe. However, beneath that, this 777-200, some of you might have seen this more recently. Flight 328 made an emergency landing at Denver Airport because one of its engines exploded, caught fire, and literally fell off the side of the plane. Everybody survived. The plane made a successful emergency landing. There was debris scattered for about 20 square miles over people's houses. There's an incredible photo that was in the BBC of literally part of the engine sat on a man's driveway. Again, however, the FAA have got involved. Several international organizations have become involved. And the allegations again on Boeing are this safety cover-up, that they know of technical errors with the aircrafts, and they're not letting airlines and their customers know about them, and these incidents are happening. So its current stock price, this was as of last night, I think, is $269.50. Put that into perspective, pre-COVID and pre the grounding of the 737, which was grounded for 20 months, it was nearly $500, and it's never really recovered since then fully. Oh, that 439, sorry, is actually on the slide. Boeing survived the whole 737 MAX incident relatively well. Despite huge economic loss, the company is enormous. Its big competitor is Airbus, and Boeing still outnumbers them on scale, production, and value. However, these two more recent incidents again have brought to light accusations of cover-ups, accusations of sort of inside jobs of the big consumer that don't want to cut costs. It's not that Boeing are producing unsafe aircraft. It's that when they know there's a problem, they don't want to address it because it costs them money. And I think all of this together is beginning to raise questions about Boeing's viability as an independent company. I'm not saying Boeing's going to fail overnight. I genuinely think it's far too big to fail. But I think Boeing Global, in its aerospace sense, so the plane manufacturers, could be in quite serious trouble over the next 6, 8 months, 12 months. It's going to be really interesting to see how it plays out as they handle two more aircraft models that have had incidents. And again, if either the 737 or the 777-200 are grounded, it will be hugely damaging economically. And if that's the second time in less than 3 months, then Boeing could be in quite a lot of financial trouble. So that's sort of the end of my little presentation. Obviously open to discussion and questions about this, but I think it raises issues to do with big business, to do with managing big business, and also how, you know, whether companies can be too big to fail even when people's lives are at risk. But I'm interested in your thoughts, guys.
No, this is a really good question whether companies can be too big to fail. So recently on Boeing, I read the news. Boeing is a US company, and then Airbus is European. So US are they supporting Boeing in terms of government funding, and Airbus itself is it being supported by European countries? There was recently a trade dispute, so it started long ago, 2004, something like that, where when Boeing and Airbus, US and Europe kind of had a trade dispute, and they slapped trade tariffs on both of these companies from each side, and then there was also a follow-up tariffs on many other goods as well in between these two trading blocks. So the thing about Boeing, whether it's too big to fail and negligence in this case, is in terms of a huge MNC, it can be too big to fail, because it is, I wouldn't say a monopoly, but there's only Boeing, Airbus, and a few other airplane manufacturers. So it can be, there can be a huge problem when it comes to this, and the whole aeroplane manufacturing operation itself. It's not like a new player could just enter the market and kind of take over because of what Boeing is doing, their mistakes. So as you asked, is it too big to fail? I'll say yes, it is. And should it be a problem? Yes, it is a problem. And what kind of regulations do you or Tom think that could be kind of introduced? Should there be more oversight, or should the government cut funding if they are even funding them? The kind of questions I've got.
Yeah, no, I think you raised a really interesting point there about what an almost monopoly. You know, Boeing were founded in 1916, I think. They just are no other manufacturers that match them on scale or value. I think in terms of oversight is really where they should be looking from here, especially in terms of transparency of what Boeing do. Because the press releases after every incident are identical. Boeing's response is the same. The investigation procedure is the same. And I think what needs to happen is Boeing needs to be more transparent about what they're actually doing when they're aware that there are issues. And I think with the Denver flight, the 777 model, that will be interesting to see is there's already rumors that the incident matched a crash back in 2018. If that's proven, all those aircraft will be grounded again. It will be a repeat of the 737 MAX. And I think at that point, in terms of the damage to Boeing, it might be about time, whether it's a complete overhaul of their management, you know, firing directors and that kind of thing, or whether that is positive change in terms of them becoming a more transparent organization. Only time will tell.
Tom, you're muted.
So I am. Good point. Can't tell you the amount of time I've done that in seminars as well. Yeah, I think it's an interesting one. This kind of whole playing off the need for regulation, or kind of overhaul at least of the kind of management against if a company's too big to fail. And I'd very much on the side of a company such as Boeing is, I don't think, too big to fail, in the sense that it does provide a lot of jobs. But I'm a big kind of proponent of the free market in the sense that if people's lives in this case are being put at risk by kind of either not strict enough regulations, or not strict enough following of the regulations and reporting of such following by Boeing, if people's lives are being put at risk by kind of negligent practices like that, I think the free market needs to take over and just say, this company is obviously failing to do its kind of public duty. And I mean, Boeing to a large extent are providing a public good in the kind of sense of transport. And everyone, as Adam said, has been on a Boeing plane at some point in their lives, or at least if you have been lucky enough to have been. And certainly for them, not kind of, especially if this report from 2018 comes back to kind of reflect true negligence in the sense that they knew what was wrong with the planes and they chose not to ground all of them, and then it happened again. If that comes back to kind of reflect that that hypothesis, I think there does need to be quite either a deep kind of look into whether Boeing have kind of, I guess, betrayed the trust that kind of customers have put in them over the years. And certainly there needs to be a kind of stricter regulatory requirements on them. And indeed, I think quite a lot of, I'm not sure if I'm right in saying this, Adam, I think you might know a bit more than me, but I think a lot of kind of regulation in the airplane industry is kind of done by the companies themselves. And the kind of trust that's placed in the companies by regulatory bodies is quite large. I don't know if that's right. I think if you could weigh in on that, I'd be appreciative.
I was obviously, we were saying earlier, it's almost effectively a monopoly, not quite, but near enough. And you're dead right there, that the companies themselves, because it's such limited knowledge. And I suppose this reflects back to what we were talking about at the beginning, where we were discussing how I completely forgot what I was going to say there. Transparency and communication between government and businesses. And I think it's very much the case that business is being kept in the dark. And I think even the 2018 report, whether that matches up to the Denver incident, if you look at the numbers involved in terms of fines and crash victim beneficiaries and all of that kind of thing, Boeing can almost absolve the cost. And I suppose our point earlier, whether they are too big to fail, it certainly looks that way. However, saying that, like I was saying, if they're having more and more of these incidents becoming more and more public, if that public trust is removed in Boeing, we may see a rebranding, a new company. But I don't think anyone will come in from the ground up and take Boeing's place.
Yeah, it will be the case where Airbus kind of take its place, and that's the only viable competitor other than, I think, Bombardier. And I wanted to raise this point when Adam and Tom, you talked about the free market kind of doing its thing. So I raised the point earlier where the EU and the US had a trade dispute, and Boeing and Airbus were kind of caught in the middle of it. And now that EU and US are seeking to solve it, they kind of lifted the trade tariffs. Would that mean that those aeroplane operators in the US will kind of favor Airbus? I don't know the statistics of how many of them already use Boeing, how many use Airbus, but maybe we could see the free market doing its thing if these tariffs are lifted. Do you think so?
Yeah. So if I'm picking up your point right, you're saying that currently the US might be more shifted towards kind of using Airbus and Europe towards using Boeing. And is that wrong?
It's the other way. Boeing is US.
The other way around. Boeing is US and Europe is Airbus. Okay, my bad. Yeah, certainly with the removal of those tariffs, I mean, kind of Trump's protectionist policies being kind of like removed more and more by Biden is kind of seeing trade. The airline kind of industry is going to be any different to that, and especially with the problems that Boeing is seeing. I think that's going to kind of act as a bit of a catalyst towards opening up that kind of trade route. So certainly, if there is a shortage, I mean, I don't really know much about it, as kind of you kind of alluded to there as well. Like I'm not too sure the kind of various weightings of like who uses Boeing and who uses Airbus in the US, but certainly if there is a contingent weighting towards Boeing, I would expect to see Airbus numbers picking up, especially if we see some more of these kind of crashes come through.
I was just going to say there's a question there in the chat that I'm happy to answer about monopoly in Europe versus monopoly in America between Airbus and Boeing. I think the only thing to note is obviously their aerospace companies fly all over the world. The companies themselves, obviously Boeing is based in the US and Airbus is based in Europe. I wouldn't say that Airbus have a monopoly in Europe and Boeing have a monopoly in the US per se, because those companies transcend global borders. It's in the nature of what they do as a business. I would say that the pair of them as two large companies do pretty much have a monopoly over the market of manufacturing and management of civilian aircraft. So I hope that sort of answers it. It's not a monopoly per continent per se, but sort of the pair of them having a generic monopoly. And just on what the other two were discussing there, I think the other thing that is interesting to note possibly is that Boeing also have large contracts. Their subsec, the Boeing defense element, have large subcontracts with the United States Department of Defense. They make missiles and they make transport planes and all that kind of thing. So when we were talking about regulation and a potential government bias, militaries around the world buy Boeing aircraft. They buy Boeing's missiles and that kind of thing. And I think possibly when you've got big money in the defense industry, governments tend to be very unwilling to tread on their contractors' toes. And I think regardless of the mistakes Boeing make, there's some civilian oversight from the FAA and the European, I'm trying to remember the name of the European version of the FAA. There is some civilian oversight. However, on a domestic level, how likely governments are to interfere when they have such big defense contracts, especially the United States, will be interesting to see, but I can't see there being dramatic change in regulation or pressure from domestic governments.
Yeah, this kind of feeds into the whole lobbying in the United States. So Boeing could have a huge lobby with the government itself. So I don't think there will be any regulation to kind of shake up its business, but maybe a few regulations to make it look better. Maybe we'll see that kind of how you say, just sprinkle some glitter on the paper in that sense, where you see the government just trying to make people happy in terms of regulations. I don't think there will be any groundbreaking regulations in the next few years.
Sure.
So anything else?
No, I don't think I've got anything to
on the Boeing
weigh in on.
No, all from me.
That was a good session. It was really informative, both all of what we've discussed. I hope the attendants as well found it informative. And this session is recorded, so I'll end the recording now as well.